So hello, everybody. I'm Doug O'Bannon. I'm the one that has designed our new strategy course, Management 5650. And what we're trying to do here is, if you've taught strategy before, you know that all those textbooks are kind of the same, all very standard chapters. You've got industry analysis, you've got company analysis, you've got Porter's Five Forces, you've got Jay Barney's resource-based view. But they never really put the two together. They never really integrate those two and then say, all right, how do we allocate resources? So I've developed this framework called the Attack, Defend, Retreat framework, and I'm building the new course around the framework. So what that framework will do is it will do market analysis and it will do company analysis to decide where you should attack, defend, retreat, or avoid with regard to your resources. So it's a different approach. It's a unique approach to strategy. It will be a unique differentiator, we believe, for the School of Business, because nobody else is doing exactly like this. They're all kind of, like I said, just sort of standard classes that fall along this textbook that don't integrate the material. And strategy is inherently integrated. So we've got to do better, we think. So we've developed this new method of teaching, and it really is just critical thinking applied to a competitive environment. And critical thinking is always a good thing for graduate students. So that's going to be our focus of the class. What we're going to do with that class is we will build in classic strategic management content of the kind that you've had before, Porter, Barney. So these traditional classes in strategy never really integrate these two main theories of strategy. They just don't do it. So they leave two primary chapters kind of hanging by themselves. They just sort of move on, then move into different topics. And then what they do is they explain different forms of strategy. So then they'll explain low cost or a differentiation competitive advantage. And they never really say when to use them. So just without saying how do we think, how do we decide which one of these cards we want to play at any one time. So the strategic thinking framework we've developed does that for you, basically. It takes traditional strategic management content, puts it into this larger framework of strategic thinking. It says, this is how the pieces fit together neatly into this puzzle, people. And now what we do from that is, from there, we can then decide strategy. So it's going to be a point of differentiation for us from other schools. And so that's kind of why we want to do this at this point. And the way the capstone simulation fits directly into this is the capstone simulation provides an opportunity to discuss the framework. The capstone simulation has 5 different markets. We talked about in the framework, how do you choose the right battle? Well, those 5 different markets represent battles. So what we're doing is we're taking it to the next level within the simulation, not decisions, but now really how do you think strategically about where you move. And what that forces students to have to think about is, where do I spot the opportunities? Where do I understand where I'm competitively stronger? I'm not just going to choose a low-cost strategy. I'm going to pursue that because now I understand I've got that cost advantage, and I want to press that advantage with greater resource commitment. So that's kind of how we're approaching it with that framework. We're building the class around that. We're using the simulation to provide the hands-on experience to understand what the framework does, how it works for them, how it makes strategic thinking accessible. And that's kind of the skill we're going to try and teach. So that's what we're going to impart to you guys today. So, Eric?
All right. Well, at the end of our last Q&A, I was a few slides away from the end of an introductory PowerPoint. I did want to make sure everybody knows that this resource is available on the website. So before I go into the PowerPoint, I just want to show you where I got it. We go to help and support. So at this point, I'm already logged into kind of a random Webster course that has already been completed. So we can look at some sample results. These professor materials would be under help and support. Then we'd go to tutorials and demos, and there are capstone PowerPoint presentations kind of right here in the middle, where I went and downloaded the intro PowerPoint that we're about to look at. So there are a few other resources here that you may find useful. But the intro PowerPoint is what I've always used to sort of kick off the simulation and give the students some context as far as uh, what they'll be doing over the next several weeks. So I don't remember exactly where we left off in this PowerPoint. The second slide is the only one you actually need to edit anything with your name and class info. Talks about why we simulate, students given an opportunity to make decisions, see how these different functional areas of a business interact and impact one another. And if they do, end up running the company into the ground, we will be okay. The student, the
Right.
professor, CapSim, it's it's an opportunity for them to learn from mistakes and also take some risks as far as running their company. Uh, there was a monopoly in place. The monopoly gets broken up into those 6 teams. You'll see the starting conditions for the simulation in a moment when we look at round zero. Um, so how everything looks after we broke up the monopoly, where the students are picking up their their tenure as CEO. So everybody starts with 100 million in sales. There's 5 market segments. You start off with one product in each of those 5 markets. It's a closed marketplace, so same 6 companies we start with will be the same 6 that we end with. The 5 market segments are listed down here: low end, traditional, high end, performance, and size. I would say we try to keep this as logical as possible. As close to the real world as we can keep it. Your low end consumer, very price sensitive. They're not looking for something that just came out of beta. They're looking for something that's proven and it's cheap. In high end, they're kind of looking for the polar opposite, right? They want brand new, they want cutting edge, they want that product that just came out of beta, and they're willing to pay more for it. So, um, we talked about how the markets are kind of overlapping at the beginning of the simulation, and it's possible for your traditional product, for example, that market right in the middle. It might make a few sales in some of these other segments that it's overlapping with early in the game. As these markets spread apart over the course of 8 years, or 6 or 7, however many we have time to do in our class, the markets will spread apart. And it's essentially going to force students to specialize their product more and really target that market that they're going after. Now, they'll need to do some analysis as far as should I continue selling my product in that market? Where might I want to introduce a new product? Some of this depends on what our competitors have done, right? If let's say there's twice as many products in one market as another, it's sometimes the path of least resistance is the best opportunity for where our new product should go.
And if I could jump in here just for a second, Eric. This is Doug again. I would just say what Eric was just describing is strategic thinking. And again, that's where we're going to be building this model. So should we be attacking to this market, retreating from this other market, preserving resources to go fight another battle with a new product? That's the essence of strategic thinking. Where do we apply our resources to? Okay. I might
And
be
also,
jumping in with
where
some of that.
yeah, where, anytime, Doug. I love when you jump in. Uh, I'd say it's also about thinking about where are we not going to go, right? Sometimes students will
Avoid.
struggle with wanting to do everything, right? They want to be the best product in every market. And,
Right, and the way I deal with that is I show them how much money they're losing and how much they had to invest, the millions of dollars they had to invest to lose that amount of money, and say, could that be better spent? Could we retreat here, attack somewhere else? That usually wakes them up.
the income statement can be very convincing, especially when it's got some red on it.
Yeah,
Now,
exactly.
the next the next 5 slides, I'm just going to quickly go through. These talk about each of the markets one by one. It goes back to what I was saying about low end being price sensitive and high end being more cutting edge. The marketplace in general grows by about 14% per year. Um, High tech is growing closer to 20 if you look at those markets. Um, So just think of it this way: in our low end and traditional markets, where a majority of the consumers are at the start of the sim, they start larger with smaller growth rates. The size market, the performance market, and the high end market, they start off significantly smaller, but their growth rates are a lot closer to 20% instead of 10, or around 10, I should say. Um, so at the start of the sim, you have these two sort of cash cow markets in low end and traditional, whereas by the end of the sim, all five of those markets are quite attractive in terms of potential profitability. Of course, it depends how well they're executing their strategy and a number of other factors. But just so you get the feel for how the industry evolves, um, the first 3 years can be a struggle for students. I may have mentioned yesterday, or I'm sorry, on Wednesday, that round three is kind of notorious for emergency loans, because round three is when students feel like they've got it all figured out, right? They've done a couple rounds already. They get to year three, they maybe overextend themselves. Year four and five, they tend to get their heads above water. They start to make a decent profit. Six, seven, and eight are typically positive for most teams. They're usually big years for profitability, since the market has continued to grow this entire time, and they've had a chance to fix some of those underlying problems and start to really optimize the operations in their company. Again, it's not going to play out that way for everybody. Sometimes students will struggle throughout. Other times they'll have no struggles at all. But kind of the typical learning curve would be, uh, they're figuring things out early. They hit a few bumps in the road. They start to figure it out midway, and then by the end of the sim, they're usually ending on a high note, um, after they've had a chance to fix some of those underlying issues. So the reason I explain this as thoroughly as I do is I'm trying to convince you to do at least 6 rounds. Really let those strategies play out. Let the students, learn from those mistakes and try to correct them. The more time we give them, the higher the likelihood is that they're going to end on a positive note, which tends to lead to more positive evaluations. Which, if we can structure this to make that, a little more easy for the students to give us nice marks, why not, right? Now, the decision making process, the markets, or I'm sorry, the departments in the simulation, as the students go in to make decisions, R&D is listed on top and finance is listed at the bottom. Kind of the most basic advice you can give to students is also the best. You really should always start from the top with R&D, work your way down to finance. The reason is each of these departments requires information from the ones before it in order to make well-informed decisions. So, a quick example: I don't know what price to put in for my product on marketing unless I know what market we're targeting with that product in R&D. Or I don't know how much to produce in the production department unless I've already done my sales forecast for that product in the marketing department. There's countless examples like that. They really need to go in this order, and that's the order they'll learn when they go through the tutorials, like the rehearsal tutorial. Um, that's part of that getting started section. At different points in the game, so in round two, the human resources module will turn on. In round four, the total quality management department will turn on. Uh, Plenty of information about both of these in the online guide and in the team member guide for students. But
Eric,
neither.
do faculty have the choice to turn those on or off, the additional modules, or is that built in now?
The standard setup, we always have them on at round two for HR and round four for TQM. If you wanted these off, we could switch them off. The downside is there's points allocated to these on the balanced scorecard in that learning and growth quadrant. We want to see that we're investing in our employees and we're investing in productivity and
Right, so you're hitting all the
improving.
metrics. Yeah.
Exactly. So to really hit all the metrics, you kind of need these to be turned on.
Okay.
Also,
So Doug,
say
why
that
would
they also
we
help
why would we
performance
turn
too.
it off? I'm just curious. Why are you thinking turn it off?
was just never really particularly fond of the advanced marketing additional module. It
Awesome.
seemed like a lot of sort of small minutia decisions that, should we be on television or radio or internet? It's like, well, okay, that's all. It was just a personal preference.
That
Okay.
these additional modules, these are all the available modules. I should point out, we're only using the first two, so we're only
Okay.
using HR and TQM. The last two, I mean, outside of the U.S., labor negotiations is not a very popular module.
Mhm.
That from the CapSim perspective, most of the folks using it are based in the U.S. It's maybe in 10% of total courses.
Mhm.
Advanced marketing, if it's not a marketing course, it's a little too granular.
Yeah, that's exactly.
As Doug was saying, it's really kind of getting really specific as far as what customers prefer in terms of which medium should we use to reach customers in each of those market segments. Um, it puts a lot of emphasis on marketing. So if the course isn't marketing, it's usually overkill,
Eric, I have a
which is
I have
why.
a follow-up question for that. Uh, so the two that are actually turned on are HR and TQM, and the other two are optional. Now, which items are in the CompXM? The only the HR and TQM, or
Only the HR and TQM.
okay. So that means you have R&D, marketing, production, finance, HR, and TQM. Okay.
So there's always those six in CompXM, and in CompXM, they're all available right away. In the group simulation, HR will turn on in round two, and then TQM in round four.
Gotcha. Okay.
So we give students a little bit of time to learn these departments first in round one, all those core functional areas. Then we'll introduce a new wrinkle in round two, and then we'll introduce another new department in round four.
Gotcha. Thank you.
Okay. So R&D, this is where I'd say you're executing most of your strategy in R&D. This is where we decide which markets we're going after with our products, how many products do we have. If we're going to invent a new product, we do it here. We're determining the reliability of our product. So, three of those four customer buying criteria, age, positioning, and reliability, are all sort of decided in the R&D department. Um, the fourth criteria would be price. That's gonna occur in marketing when we get to the next department. R&D is it's an interesting department to talk to students about because when they're struggling, they start focusing on cutting costs. And if I'm cutting costs from R&D, it's usually coming at the expense of the company. We're not really helping ourselves if we're hurting the top line and the bottom line by not keeping our products relevant in the eyes of the consumer. R&D is something I'd recommend familiarizing yourself with, and we'll talk more about this next Wednesday when I go through the student side of the website with everybody and kind of get into the decisions, and we'll actually look at some of these things in action. But R&D is a very good one to know. Excuse me. Marketing, of course, this is where we set the price of our products. The main thing to remember about price is that in this simulation, customers expect our prices to get cheaper as time goes on. So every single year, the price range drops by 50 cents. Uh, this is in conjunction with the fact that they also expect our product to get better. So we're being put in an environment where our product is expected to get better and better while we sell it for less and less, and we're supposed to improve our profitability. So they're going to have to look at their costs, think about ways to reduce cost, and how to maintain healthy margins. It's definitely doable. There's lots of room for improvement from that monopoly uh, that they inherited, but something that they should be thinking about throughout as they execute their strategy. The production area, um, after we've input our prices, and I should have mentioned, we're also, um, of course, promoting our products and investing in better distribution channels in that marketing department. And then it kind of culminates in doing a sales forecast. So, based on the design of my product and the price and how much I've spent on marketing that product, we come up with a sales forecast. I would say the sales forecast is the most difficult decision that students are making. Anybody who spent time in industry can relate. Sales forecasting is not always, it's not only impacted by what we're doing. That's what makes it so hard. It's also, how much we sell is going to be impacted by what our competitors are doing too. So it takes students a little bit of practice to get the hang of it, but as time goes on, you usually see their ability to forecast get better and better. Um, Anytime I talk about it with students, I say, similar to what I just said to all of you, but I like to tell them it's the one time in your life that you get perfect information. You know exactly how many customers you have, you know exactly what influences their decisions, and you know the changes you made as an ownership group. So you can estimate how customers would react to our changes very effectively. Um, the uncertainty comes from all the other teams in the simulation. That's why, even with perfect information, we're never going to make a perfect forecast. It's because we just don't know what those other five companies are going to do. Hope that makes sense to everybody.
It's like chess.
When they move in,
all the pieces are on the board. You have perfect information, but you don't know what the other guy's thinking.
I like that example too, especially as a chess player.
Mm-hmm.
So after they've put in their forecasts, which I usually encourage students to be a little pessimistic with that forecast, treat it kind of like a worst case if you want to play it safe and try to avoid those emergency loans. Think of the forecast like the guarantee. You know, this is what's driving all my financials, all my revenue projections. Um, so if anything, I'd rather aim low than aim high. um, Production is where the optimist gets to come out, right? Um, After we've done our forecast in marketing, which is more of a worst case, when we get into production, it's okay to build a little extra, just in case some other team stocks out of product, or what if we do better than we thought we would. We want to have something to sell in that scenario. So I usually recommend to students that they produce an extra month or two. Up to 3 months, I would say, is okay in most cases. But it's okay to have a little extra built just in case the demand is there. The alternative would be stocking out and watching some other company make our profit. Um, so that's one of those discussions I like to have with students along the way is, what do you think is better? Um, Carrying too much inventory, or potentially stocking out and watching someone else make our profit? Um, I would argue stockouts are worse, but I've heard some pretty compelling arguments on both sides. Of course, it all boils down to how much inventory are we carrying, right? If it's a reasonable
Right.
amount, I think you're better off with the inventory. Now, um, after they've done those forecasts, again, they go in here, they set those production schedules. It's okay to build a little extra. But production's also where they handle their fixed assets in the sim. So um, we only make students learn two. There's capacity, which determines quantity. How much of each product can I produce? The rule is you can build up to double your first shift capacity, because we have a first and a second shift of workers working that same production line. Um, the other asset is automation, which I'm sure you're all familiar with. The way the sim works is automation can go from one, which would be um, everything built by hand, up to a 10, which would be everything's pretty much built by a computer or a computerized production line. Where in that latter scenario, we only need an employee to come along and flip the switch to start the production. Um, the only drawback of that is the more automated we make our product, the longer it takes us to retool our product in R&D to start building at new specs. So there's always these trade-offs that students will have to consider. I can drive down my cost with automation, but then there's some concerns we might have in R&D, especially in those faster moving segments like high end. We might find it difficult to remain competitive if we automate too highly. In the finance department, this is the last department we should look at because we want to factor in all of our expenses from this year. Now, when they get to finance and they look at their closing cash position, if the closing cash were negative, we'd want to, of course, borrow enough money to where we would end the year in the black. There's three ways to raise capital in the sim. You can borrow short-term debt, which would be paid back the following year. There's 10-year bonds or long-term debt, which we'd have to pay interest on every round. But if you think about it, this is only an 8-year simulation. These are 10-year bonds. Technically, paying back the face value would be the problem for the next guy who's running the company. That said, you did inherit some long-term debt when you started running this company. So the students will have to pay back the long-term debt they inherited throughout the game. What they are borrowing, they'll only be on the hook for the interest expense since the bond would not mature until after the game is over. I hope that's clear to everyone. The last option would be to issue stock. If we issue stock, of course, there's no interest payment. We would have to pay our broker, only going to be 5%. The drawback of issuing stock is the more we issue, the more we're going to dilute our share price. So, there are some objectives for things like stock price on the balance scorecard. It might be difficult to hit some of those measures if we issue too many shares. And finally, I want to talk about pro formas briefly. Pro formas are like if-then statements. So if my decisions come true, then this is what everything will look like when the round processes. Now, again, nobody is perfect at sales forecasting. That includes me, who's been doing this for a very long time. Um, your pro formas will never be perfect because your sales forecast will never be perfect. It's important for the students to know that these projections are simply telling us what we put into the spreadsheet. This is how everything would look if our decisions came true. So I encourage students to kind of compare and contrast. Look at your worst case. How do your financials look? Do you have cash in the cash account? How's your stock price look? Things of that nature. Um, and then compare it with your best case. What happens if we sell everything, right? What if we have no inventory at the end of the year? How do we look in that scenario? Hopefully, we land somewhere in the middle of our optimistic and pessimistic outlook. Um, and we are okay in terms of avoiding an emergency loan when the year ends. But I would certainly want to look at my pro forma income statement, my pro forma balance scorecard, our cash flow. But um, I'm usually drawn first to the income statement. I want to look at product by product and make sure they're all in the black, right? Um, if we have a product we're selling and it's currently losing money, on 30 million, 30 million in revenue, but it's costing us 3 million when it's all said and done. Uh, that should be a giant red flag that as a team, we need to revisit the decisions we made for that product. Look at our variable costs, look at our pricing, making sure that that we're not shooting ourselves in the foot, so to speak. But the pro formas are a great way to identify problems before they happen, right? Because this is what will happen if everything comes true. As far as grading, Doug or Joe, I'm not sure if you use the balanced scorecard for evaluation or if you use the success measures.
I use the success measures.
Yeah, that's our plan. Yeah, success measures. I mean, it's
So,
kind of tied to the scorecard, but we're not using that metric per se.
so in general, if you're doing well on one, you're typically doing well on all of these scoring methods. The balanced scorecard, I'm sure everybody's familiar with the concept, but the students can learn quite a bit about aspects of their company just by clicking on some of these items. If they don't know what plant utilization is, or if they're not sure what days of working capital is, it'll define it for them. Excuse me. It'll define it for them, explain how that criteria is scored and why it's important to your business. These success measures are very financial heavy, but they keep the emphasis on the performance of our company. So, if I'm trying to maximize my stock price, for example, I need to be mindful of how many shares I'm issuing. Um, if we are trying to maximize ROE, um, we might not want to pay off all our debt, right? We might want to have a leverage closer to 2 instead of 1 if I'm trying to maximize a specific ratio. But in terms of grading, I'm sure all this is outlined in the syllabus as far as how the success measures come into play. But these are all pretty straightforward in terms of what they are. The only tricky thing I think there is to remember is that some of them are averaged and others are just looking at the ending values. So um, I think some reward consistency, whereas others, if you make a big push at the end, you can make a big difference on something like stock price or cumulative profits or market cap. Any comments on the success measures, Joe or Doug?
I used to use a variety of those when I taught this to the MBA students, and it worked fine. But what I've discovered with the management leadership students is that it's just too financial, as you said, Eric. So what I've gone to, and this is simplistic, I know, but it just keeps them focused, cumulative profits. Just, because everybody understands that. And there's so many other variables that are going to affect cumulative profits. Let's not confuse them, I think, with a whole lot of financial metrics. Now, I don't mind if our faculty want to use those. Those are fine. But I think it's just a little too financial, so I don't. It's a preference.
So
That's right.
so Doug, so in your training course, are you asking adjuncts to use success measures or the scorecard? I mean, I'm assuming you're saying success measures, right?
Yeah. Well, cumulative profits and or ending stock price.
Okay. So that's
Actually, no, that's not true. I like to use average stock price, which you guys don't have listed, but I've just calculated because ending stock price can be manipulated a little bit of end gaming. You've seen that, Eric. But average stock price, okay, did you max? Who was the highest average over the course of the game? That can't end game it as much.
okay. So let's let me see.
So, Doug, just as a heads up, you can change that. If you go to
There it is. Yeah.
homework
Okay.
and then success measures, there's one called methods right here. If you go into methods, you can actually switch stock price over to average if that's your preference.
So I don't have to
While
calculate
you
it.
were talking about it, I thought I would save you the trouble of calculating it next time.
Yeah, because it's kind of a pain.
Exactly. So
For 6 teams and 8 rounds, it's kind of a pain.
that's why I wanted to show you this real quick. That way you're not
I appreciate that. I didn't know
putting
that was
together
there.
a spreadsheet. Just that. Remember, it's under homework. Success measures are they're also under scoring. You're looking for homework. That's where we can edit.
And
Okay.
I've
Thanks.
used the market cap in the past. Do you not find that useful?
Well,
I like market cap.
You could, I mean, because that's, you're maximizing shareholder wealth, so you certainly could.
I mean, as a concept, students would like to, oh, okay, hey.
Here's the reason. Here's the reason why I don't, because I don't want students. It's hard enough for students to understand profitability. I think it's even harder for them to understand all the working parts of a stock price. Right? That gets tricky. So if you're talking about market cap, you've got to be talking about stock price, and this just gets kind of financial for these guys. So that's just my opinion, Joe. I'd like to keep it a little bit clearer.
Okay. Okay. No, I'm just curious. Okay.
Mhm.
So the training course focuses on the comparative price,
The profit.
comparative profit, and the average
Stock
stock price, average stock price.
Mhm.
Okay.
Right.
Cool. That works. That works.
Okay. So we just went through kind of a more thorough overview of the simulation with today's Q&A, which I think should be beneficial to the group. That was very similar to how I would introduce the simulation to students outside of the professorial comments we were making about things like grading. Um, when it's time to get the students into the simulation, um, I've found it very beneficial to show them uh, this industry newspaper called the Capstone Courier. It's underneath industry results, and then it's under reports. You could just tell students it's located in their reports. Their left-hand menu is a little different. They have one that says reports, and then they would go to the Capstone Courier from there. So we want them to look at this Capstone Courier, downloaded round 0 and round 1 from kind of a randomly selected um, course that just finished. Um, but within this report, it's good to give students a little bit of an idea of what is contained in the report and why it's important to look at this. Why you really have to look at this if you're going to make well-informed decisions. Um, Obviously everybody started off the same, so for things like sales and profits and margins, I'm not usually talking about those sorts of things until round 1 has ended. But I want them to be aware that their company's about 100 million right now. That at the end of year 1, we hope to see that it's grown by about 15% because we know the market's growing at 15%. Stock and bond summary, again, not many comments here, or in the financials, or in the production info. I mean, I guess I might I might make a comment on the production info that you can see as a company. The blue line represents your first shift capacity. The yellow line represents how much production you did last year. So this is one of those kind of underlying problems with your company that you're not even using your first shift capacity when you took over, or at least the previous ownership group wasn't utilizing their assets very effectively. This yellow bar could be up to twice as long as the blue bar. Remember, we have 2 shifts of workers. Right now, we're not even using all of our first shift. So that's one comment I might make, that they should um, review, the assets you inherited and determine if those make sense, right? Since we're talking to faculty here, I will tell you that in two instances, in traditional and high end, and this is true for all companies, if I compare what I sold, which was less than 400 units for high end, and our capacity is 900. With a capacity of 900, we could build up to 1,800 units. Calculator here, but if um, if we are in a market that's growing, standard calculator here. If we sold 366 and say the market's growing at about 17%, Year one, we're at 428. Year two's 500, 3, 4, 5. It took until year 6 before we finally utilized all of our first shift capacity. And that's assuming no more new products were introduced into that market, which, is a big assumption. Usually there's at least one new product that gets introduced everywhere. Um, you can see just based on the size of the plant versus how much we're currently selling that the issue is probably the plant is too big, right? That's somewhere we might be able to sell some of those idle assets, take the cash, and reinvest that into something that would be more productive, whether it was a new product or it could be automation on another one of your product lines. This is something I hope students figure out on their own. um, I might mention it at the end of like year 3. If nobody has noticed that this is a problem, I might try and draw their attention to it after a few years. Um, it's something I'll look for at the end of round 1. I might check to see, did anybody realize that they had too much capacity in traditional and high end? Did they downsize those products? What did they do with the money? Did they just keep the cash, or did they actually reinvest it into something that will bring the company a return moving forward? Um, so those are the kinds of things we're going to look for as we're debriefing. But when we're introducing the sim, we just want to tell them what's on this report. So in the production analysis, we can see how well we're utilizing our assets as a company. We can see what we sold last year, how much inventory we had left, your current automation and capacity levels, your variable costs, right? We see how much we sold our product for. We see uh, your costs, at least how they were at the end of last year. This reflects, think of it like yesterday, before we started making decisions. On December 31st, before we started making decisions, this is how much it cost us to build our product. Um, that's very useful information to know when I'm trying to determine my price for this year.
And Doug, how do you,
It's
excuse me, Eric. So, Doug, how do you go through this information with your students? Doug, can you hear me?
Yeah. Are you asking me?
Yeah. I mean, when you.
Oh, I thought you were asking Eric. What I would explain to them is that, yeah, if you added material and labor costs, you have variable costs. Now, when price matters, like in the low end segment, costs matter a lot, and pay attention to that. So here's where you can look for opportunities. If you've got the lower material and labor costs, you can start to lower your price, and nobody else can match it because their costs are just too high. You've chosen the right battle.
Because we're.
It's all about spotting that opportunity, seeing those differences.
And they do, by this time, when they see this, I mean, they have a sense of how to read some of these reports, numbers, and they're not looking at this for the first time, meaning
they'll encounter this report as they go through the rehearsal
okay.
as well.
Yeah.
Right. It's a little more simplified in the rehearsal. There's only 3 teams. I think one reason it looks a little overwhelming is when you have 6 companies that are all selling 5 products. You end up with a lot of numbers on the page. I try to draw their attention to their company, right? If I'm talking to Team A, I make sure they know these 5 are your products. Make sure they know what's contained on this page. And that they can calculate things like cost of production, variable cost. Now, the point I try to make when I talk about this is, I might mention that, your low end product, let's say it costs you about $15 to produce, or, in traditional, 19, right around there. It's one thing to know that the customer would love to pay me $20 for my product. But if it costs me 19 to build it, that's not leaving me much of a margin to pay for the R&D project, the promotion and sales budgets, to pay my employees. It's just not enough of a margin to where we can cover our overhead and still expect to make a profit. Um, so in a market like low end, when they look at these customer buying criteria, they'll see that price is more than half of what the customer cares about. It's fine to know that the customer wants to pay me 15 and that they would love my product if I could give it to them for 15 bucks. But if it costs us 15, it's just not realistic. So the kind of early problems I look for are things like, did the team lower their price before they lowered their cost? If they did, that came at the expense of their margins. And you know the giveaway for something like that, if I just pull up an example from this course, um, if I see margins that are much lower than the other teams, that's usually a good indicator that this team may have lowered their price before they lowered their costs. And we can
Hence
see
the
that right away
loan.
on that first page. Exactly. Now, I would say profits are really negative in this example because not only do they have low margins, but they have extremely high expenses. Right. When I look at their SG&A expenses, so sales, general, and administrative, um, most of this comes from what they spent marketing their products. So, I've looked at enough of these to where if I see above 20% in that first year, I can almost guarantee that they um, spent more than they could afford to marketing their products, particularly those small products, right? Let's just take a peek and see if that holds true. Um, so we were looking at Team D. In the traditional market, they spent about $5 million marketing their product. Most of the other teams, if I added up promotion and sales, it's closer to 2 million. So very aggressive marketing in traditional. Um, in low end, looks like same story. This team really focused um, on improving uh, their distribution channels with money they probably didn't have. We see that all coming out of their profits uh, when they lost 12 million in year one. But the really problematic ones are when we take a very small product, one that might have only sold 400,000 units, and then we turn around and spend 3.4 million marketing it. So these are the kinds of things I almost hope happen in the first practice round so that we can talk about it at the end of practice and the students can learn from it before we flip the switch to competition. Um, but getting back to round zero, when we're first introducing this report and we're saying you need to look at this report because it tells you, how many customers there are. That's the total industry unit demand. It tells you next year's growth rate. Um, what's important to this group of customers? What are their buying criteria? What do they weight as most important and least important? Uh, as a general rule, the first two usually add up to at least 70%. So I don't necessarily need to do a great job on everything. Low end consumers are telling me they don't care much about the reliability. So as long as it's in the range, we're fine. But as a company, I don't have as much incentive to give them a premium reliability if it's not going to really lead to an uptick in sales, right? I might be better off closer to the bottom end of reliability with a cheaper material cost, and then I could pass that along in the form of a lower price, and that would really move the needle, right? Price is much more impactful in this segment. These four things, the price, the age, the positioning, the reliability, these are going to change from one market to the next. So as the students are making their decisions, I just want them to know that it's not about just having the lowest price in each market or having the best positioning. You really need to pay attention to what the consumers are telling you, and make sure that your decisions hopefully result in a product that these folks would want to buy. I mean, everything is predicated on having a product that the consumer wants to buy. So unless we are looking at the buying criteria and using this information that's been given to us, um, we're throwing darts at a dartboard, right? We can review our report and know exactly what the customer wants. Uh, Using this information, we can figure out what they would want in round one, uh, if I know what they wanted at the end of round zero. Right? There's there's more than just the Capstone Courier report. There's one other report I do want to make sure that you folks are aware of. That one's called the Industry Conditions Report. And this is one where I always recommend, if students are sitting down together making decisions, you should have at least one copy of the conditions report printed, and keep it with you. That way, one, we don't forget which segment is which. It's labeled for us. It also puts a little star within each circle that shows us where the ideal position would be within that market. So even as the markets move, the kind of sweet spot or that ideal position, it always stays in that same location of the circle. Just for some perspective, remember, this business model is, customers expect a faster performance and a smaller size as time goes on. So the bottom right of every circle would be kind of the cutting edge of that particular market segment. Um, so it makes sense that in high end they want something near the bottom right. That's the leading edge. In low end, it's closer to the top left. They really don't care about positioning in low end. Traditional, they're just looking for something proven, right? That iPhone 6 that that was released years ago is probably more of a traditional product at this point than high end. It's kind of running a life cycle. But this report contains information that is very useful when you're making your decisions. It tells you the drift rates. So the reason I want to draw your attention to this is if I know where the ideal
Oh,
position
excuse
was.
me, Eric, I need to interrupt you for a second. So on Wednesday, when you do this, it'll be greatly appreciated if you sort of talk about something for about maybe 10 minutes, Q&A, or so break it up because I'm looking at how this flow is going. You're not giving the participants a chance to ask questions, and I don't want to interrupt you all the time, but I think it'll work better if you sort of talk for maybe 10, 15 minutes, and then
Sure, sure.
Q&A, or that way you break it up into 3 or 4 segments.
The only issue is I can't see the little hand raise. As soon as I share the
Yeah,
screen,
yeah.
see is what's on my screen in front of me.
So maybe you can prompt, and I can prompt. So Doug is, well, he's testing his. So I'm
Yeah,
gonna
I was testing.
unmute Laverne and Ruben. So gentlemen, do you have any questions or any comments or suggestions, thoughts? Ruben, can you?
No, this is Laverne. I'm good with the way it's going. I've got a few basic questions. I may have missed that part of the conversation because I wasn't here earlier this week. But I pretty much follow what Eric's saying there.
Okay.
So am I. And I guess the question that I have foremost is between the rehearsals, the practice, and the competition rounds, in a 9-week term where we are, in addition, covering all of the ADR framework and its application through this tool. How does that compare, Eric, with other schools, other program, other curriculum? Is that a fair amount of time in the broad scheme of things? You talked about the Courier report; they're seeing it for the first time. You're talking about the CapSim tool, and they're seeing it for the first time. There's a registration process. There's, as I said, the rehearsal process. There's the practice process, and then you go into the competition.
Is your question, Ruben? Can we get all this stuff in? Is that the question?
That really, in a strategic, comprehensive way, because it's not a course on CapSim. It's a management and strategy course that includes all the ADR components.
Correct. Right. So I've been doing this for 15 years. So yeah, you can get it all in.
Okay.
And the course shell that I've written it's online and on ground, does exactly that. It shows you on a week-to-week basis how you can cover all this stuff.
And
That was my only question, Doug.
Go ahead.
go ahead, Ruben. I'm sorry.
As it measures up with other schools, this is actually quite common. I'd say 8 to 11 weeks is probably most common. Even if it's a 16-week class, they'll use about 8 to 11 on the sim. I get a little nervous when, let's say, we only have 5 weeks to deliver everything. Then it can get kind of cramped. But the best approach I can recommend taking is making sure they have a bit of lead time up front to really dig into those getting started materials, to read the little 25-page team member guide. Of course, they can dig in further, right? This PDF guide I'm mentioning, it's also called the Team Member Guide, 25 pages. It's a quick intro to the sim. If I can get students to read that, I'm happy, right? But if I have a student that is a real go-getter, they want to learn everything about this tool, those are the ones I'll steer towards the online guide. Go through that. It's more like a full-blown textbook about the simulation. I want to give them lead time up front to really, learn the background info, go through that rehearsal tutorial in that first week. So week one, it's really getting familiar. And then, if I need to speed up the schedule, we do it at the end when the students are better equipped to handle that faster.
I have one question, Eric. Whomever, this is Laverne. Currently in Management 5650, there are, as much as I know, prerequisites for the students. So is this ADR design the same that the students can come in with no background in finance or anything you're talking about, strategy, and should be able to pick this thing up?
Well, Laverne, the prerequisite is the Business 5200, basic finance for managers.
Okay.
Right, and we're going to eventually be changing that course too. There's going to be a lot of, there will be prerequisites to this course. Basically, everything else in the program is going to be prerequisite to this course except 6,000.
Yeah, I think that's an important point. I think we can do a really fine job of lowering some anxiety by promoting that and discussing it maybe up front in some future session.
Yeah, maybe on Wednesday we can talk about that because and also, Ruben, the actual catalog changes will be made starting June 2020, and we're in the process of finalizing all the documentation. So
that's great.
So the point that Doug is making is the BUSN 5200 will. I mean, it covers some content, but we are creating. Doug is actually putting together a new course that would be more aligned to preparing students for the sim and also just strategy overall, and then using the sim as a tool to practice that strategy learning and gain a skill set around that. But this is a great question because you can't. I mean, and we need to talk to our advising team because students cannot. In the past, they would just jump into Future 650 without taking other courses, but we can't allow that anymore. So that if they do that, they will fail. We don't want to set them up to failure, so we will certainly emphasize that in the advising.
Well, because because of what we did last
Let's talk about
summer.
CapSim Core in 5,000.
Hold on. I'm sorry. Doug, go ahead, and then Ruben, please.
Yeah, I think explain to what we're going to do in Management 5000, the core. That is sort of preliminary to the simulation as well. It's getting prepared for it. So.
Remember Management
Putting
5000.
core in Management 5000.
Well, Management 5000 may or may not have the core. Remember we talked about it may have a micro sim as part of it, but
or micro sim. But in other words, we're still preparing them. Is the point? We're preparing them with a simulation in 5000. Then they're going to have more stuff in 5200. Then they'll have 5650. Is the point?
And there's one other. This is what I was going to say earlier. I found that the addition of the Business 5000 as a prerequisite, although maybe tangential or coincidental to the CapSim, was another opportunity to further orient our students. I realize that many can waive it, but for those who choose not to, we ought to consider some addition to course content that's CapSim aligned.
That's what the 5200 will be eventually.
Yeah, that's
what we're saying.
Yeah. And even if we have the 5200, there will be some hiccups because students coming into the management leadership program may be from non-business degrees, and throw a lot of numbers at them. It's not that they're difficult, just that they are not used to it, and then we have to be prepared to help them with additional resources. So, and that's one of the reasons why CapSim, we are lucky to have Eric, because we, as instructors, if you run into a section or a group of students struggling with that, we can certainly reach out to Eric and get his help.
I can't believe I don't think I've mentioned the student support available. When students get stuck, please encourage them to give us a call. I've got the info right here. We're open Monday through Friday, 8 a.m. to 8 p.m. Eastern Time. There's also email support over the weekend, 8 a.m. to 6 p.m. on the weekend. But whether they want to give us a call or email support at capsim.com, my entire team is well versed in all of our products, but particularly in Capstone, since this is kind of our flagship product. Whoever you get on the phone will be very familiar and able to coach the team.
Okay.
Okay. Thanks, Eric. So Ruben, your point is well taken. So we have to. That's one of the reasons why we are doing this, because we want everyone not only currently teaching 5650, but someone who's thinking about teaching 5650, or different site directors are hiring new faculty. We need to create some consistent quality around this course. So we appreciate all your efforts. And so if there are specific things that you think of, please email them to me and Doug, and we'll address those.
Certainly will.
Okay.
Thank you, Joe.
Thank you, Ruben. I'm sorry. So are there any other comments or thoughts? Okay. So can we talk about Wednesday, because there will be, I believe, a larger group of faculty signing in, and I don't know why people who said sign in today didn't, but we'll just move on. And maybe Eric, you can send me the documents that we discussed, so I can send it out. I did send out the ones that you sent me to the whole group with this invite.
I have some documents that help with debriefing that I'll be able to send on Monday when I'm back in the office.
Okay, that sounds great. Okay, Doug, any other closing thoughts or comments?
No, I think on the next time, this time we were primarily looking at round zero, so I really couldn't talk about relative competitive strength much. But next time on Wednesday, when we get into some different numbers in the debrief, there's where you're going to see real differences in company products, company organizational strengths and weaknesses, and then it gets a little more strategic. That first round is tough because it's anybody's guess. Round zero, I'm saying. So.
Yeah.
Agreed.
We will move forward.
So we'll dig into a round one courier on Wednesday.
Mm-hmm.
I'll get into the student side of the website a little bit so everybody can see the kind of differences between the professor side and the student side.